So I'm here with Andrew Myers and Brock Peterson of Satoshi Energy. This is the mining mini-series. We've done a lot of episodes in the mining mini-series. I don't think we've had a mining firm quite like Satoshi Energy before. They have a very innovative business model and approach. So very excited to jump in. Good to be here with both of you fellows today. Thanks for joining.
Thank you, Nick.
Yeah, thanks, Nick.
Why don't we talk about both of your personal stories and how you came to be involved in Bitcoin mining?
Yeah, happy to start that. So I got into energy systems while studying engineering as an undergrad. Did a study abroad in Australia where I was studying renewable energy and energy systems, and that's actually where I met Brock. It was back in 2009. So it was pretty early days of even renewable energy at that time. From there, I went to grad school to study power markets and energy systems. And out of that, started doing software consulting, and that brought me out to San Francisco, and I started to connect with some people in the Bitcoin space and learn about Bitcoin. And when I started to grasp Bitcoin and the supply cap and the difficulty adjustment and just the nature of the digital financial protocol, I instantly had this idea where you have these 24/7 electric power markets that are settling power every 5 minutes all year round, even on weekends and nights. And then you have this digital financial protocol that could be used for a settlement layer for those power markets. So that was kind of the seed of the idea. And then in the 2018 timeframe, that was sort of the first wave of all the Bitcoin energy FUD. And that's where I really started to dig in and get to understand mining and modeling that out.
And did you ever mine personally before you started the company?
My first attempt was doing a road trip across the US in an old Jeep with a solar panel and a battery and a Raspberry Pi and a tiny ant miner, but never got it working, but got a node set up, solar powered node set up.
That's amazing. Brock, what about yourself?
Yeah, so similar to Andrew, kind of came up in the renewable energy space, primarily out in San Francisco, working for a couple of different startups, one of which focused on machine learning applications to help optimize energy use in data centers. So obviously, while it looks like much different than a traditional high uptime data center, at the end of the day, Bitcoin mines are just data centers. So I understood that world really well coming from it. And then more recently, worked at a company called SmartWires that went public about a year ago that was trying to help optimize how energy flows on transmission lines. And obviously, what we're doing with, helping bring Bitcoin miners directly to the generation assets, it's, one of the main problems we're solving there is, with transmission constraints and capacity constraints on the transmission grid. So both my experience kind of, lend itself well. And, as Andrew said, we've known each other since 2009. So, it's super exciting to kind of work with him. And I think coming from the renewable energy space, it's actually, you pick up on Bitcoin pretty quickly. What we've been doing for, the last decades is trying to deregulate what were traditionally centralized markets, and help create distributed generation. So really kind of you can apply a lot of those principles directly to Bitcoin and, some of the problems that, it's trying to solve from a money and finance standpoint. And then it's, kind of you get to the next layer within Bitcoin mining. And that's where it becomes, really cool, because what we've tried to do from a renewable energy standpoint for years is find a load that can be sited in these traditionally rural areas where you build wind farms and solar farms. And Bitcoin mining really kind of provides that location agnostic load that can be sited directly with the generation assets. And then it can also be run interruptibly. So it's kind of this perfect use case to be able to leverage the renewable energy build out that's happened over the last couple, really in the last, kind of 5 years, 10 years in kind of at a utility scale.
So Satoshi Energy is not you guys aren't mining Bitcoin yourselves. You're providing hosting infrastructure for Bitcoin miners. Is that correct?
So not hosting infrastructure. So I think a better way to explain it is that we work with generation asset owners and Bitcoin miners, and we develop the sites, the power contracts, and software to service those power contracts. So we're really, we're finding what are the best locations on the grid to put a Bitcoin mine. We're working with the owners of that infrastructure, and then we're helping to develop that, end to end, and then bring in a Bitcoin miner that they want to do business with. So it's a very we don't have a capital intensive business. We're very much a software and services business.
And the energy assets that you're looking to use here, are those exclusively renewables, or is it just the case that there's a lot of kind of stranded renewables floating around, and so it made sense to start with them?
Yeah, I think we'll probably get into this a little bit more. Broadly, if you're just looking at the levelized cost of electricity, wind and solar end up being the cheapest form of energy, even on an unsubsidized basis. So we're focusing on the lowest cost energy. That's number one for any Bitcoin mining company. And it just so happens that, you have this intermittency issue where there's a lot of correlation between all of the wind farms in a region or all of the solar farms in a region that creates a surplus energy situation. So if you can, co-locate behind the meter or as close as possible to those generation assets, then you can capture some of that surplus when it's available. And then, we can also discuss how a Bitcoin miner would then firm up the rest of its power if it needs to do so.
Yeah, so maybe I guess to the extent that you can talk about your projects, let's dive into an example, like what would be typical and the model in terms of like how much power you're drawing from the energy installation, how much maybe if you're engaging in grid firming. Like, curious to hear more about like the specific models here.
Yeah, so the model that we've found to be the most economically advantageous for the miners is with this co-location model, what you kind of refer to as a capacity factor in the renewable space. And it's just kind of, over the course of the year, how much energy is the asset going to produce? For a wind farm, or a solar, right? You're looking at anywhere between 35% of your energy is going to come from that renewable asset. If the nameplate, meaning if you're a 200 megawatt wind farm, you put a 200 megawatt data center there, that's about the amount of energy that would come from the renewable asset. And so that's, generally true of our projects as well. They're usually just below the nameplate of the renewable asset. And really what we're doing is we're creating kind of a win-win for both. As Andrew's alluding to, a lot of these assets are have curtailment issues, have negative pricing issues. It's kind of a distortion in the market from generally a tax benefit. And what we're able to do is can alleviate some of those downside risks for the generation asset by putting the Bitcoin miner there, in physically co-locating it. So it's what's called a behind the meter arrangement. And that allows the generation asset to monetize, what would otherwise be curtailed or negative priced energy. And then the benefit for the miners is they're getting access to this low cost renewable energy and a high voltage substation to be able to connect to the grid. So obviously, like we just went through, you're about 35% of your energy is going to come from the renewable asset. Really what I always kind of explain it as is the grid, think of it like a battery. So you have this, a renewable asset that's able to provide you power, but then you have the grid that kind of essentially acts as your battery that you can take energy from when it's economically feasible. I think the other kind of salient part of our projects that's important to point out is that, miners obviously understand what their profitability is on a megawatt hour basis. So we really kind of view it as running them when it's operationally profitable. So the way we structure the contracts kind of facilitates that to where, when energy is cheap enough to be profitable as a miner, that miner is going to be running. When it's not, you'll see them shut off. Obviously now with the profit-related mining, it's, you're going to see very high, in the 98, 99% uptimes. But say there's a bear market, right? They have that flexibility to be able to self curtail and really chase that cheaper energy. and still be mining profitably, which also gets into some of the credit risks that we can kind of get into in a little bit.
I would add a detail there, Nick. Something that's super important with regard to locating behind the meter. Without going behind the meter, you're not able to capture the full benefit of that surplus energy. So if you're front of the meter, that means you're connecting at a higher voltage transmission line, and you have the same transmission constraints as you would if you were connecting anywhere on the grid. But if you co-locate behind the meter, then before you ever hit that high voltage transmission constraint, you're actually, as the data center, able to capture all of that surplus energy, or at least up to your data center's capacity, from the wind farm or from the solar farm. So it really fixes, and these are important concepts, but negative pricing and curtailment, especially for wind farms and solar farms, super important concepts. And that's where going behind the meter, it solves both of those problems.
And economically speaking, I guess it depends, but eliminating those transmission and distribution charges is really material in terms of the all-in power price you're paying. Is that right?
It certainly can be. I guess the one key item is that you don't want to build a 200 megawatt Bitcoin mine in a city center on a 220 volt distribution line, because then you're going to be paying all of the distribution fees all the way down to that lower voltage. So you almost always want to go as close as possible to the high voltage that you can. With regard to how projects actually work at the utility scale, Bitcoin mines end up paying, their fair share of transmission fees based on their peak capacity, their peak demand. And that's what transmission operators want. That's how they're compensated. And then there are sort of peak demand fees. In ERCOT, for example, you have the 4 CP hours, the four coincident peak hours. And so a miner is economically incentivized there to shut down during those 4 hours if they can predict it well enough. And in doing so, they can avoid those, highest peak charges, but they still pay their full share of transmission fees otherwise.
Gotcha. So given that the model is relying on the renewable energy asset when it's firing and then drawing from the grid the remainder of the time, is this something that, I don't know if you've dealt with, any of the sustainability people or anything like that, but is the critique that, it's not a purely sustainable story if, the time when you're engaging in the grid firming, you're still, I guess, exposed to the default energy mix of the grid? Or is the sustainability not necessarily a big piece of the story here?
I'll let Brock follow on this one, but to get it started, Bitcoin miners first and foremost care about the lowest cost energy. It's convenient that lowest cost energy, at least for part of the day, is renewable. When you do a behind the meter deal, or really any sort of power contract with a renewable generator, because you're having to get some grid power to firm it up, it's a question of, from that grid power, what is the energy mix of that grid power? It could be some hydro, could be nuclear, could be gas, could be coal, could be many things. If you are having to firm up the power, you can also purchase renewable energy certificates, which it's sort of a loose concept and in terms of how they're metered and accounted for, but effectively it adds sort of a bonus to an existing renewable generator. So you're sort of subsidizing another renewable energy investment by purchasing those renewable energy certificates. So we see a lot of Bitcoin miners interested in doing that for the power that they don't get directly from the renewable generator. And then, maybe we'll get into this, but I think in the longer term, we have to really think seriously about as Bitcoin ASICs are produced in higher volumes at lower costs, like when the Intels of the world start to reach manufacturing scale, then hash rate continues to increase. The exchange rate also increases, but maybe not as quickly on a long time frame, or not as much on a long time frame. It can certainly move quickly. So the margins for mining will decrease, and you're going to have these low volume or high volume, low cost Bitcoin miners. What does that do to the utilization rate of the Bitcoin mine? So our general hypothesis is that utilization rate decreases, and that aligns perfectly with the amount of surplus renewable energy that will continue to grow. And so you're just naturally going to get more renewable energy powered mining.
When you think about how you go about siting and identifying the most promising assets here? Is it a matter of simply, okay, there's a wind and solar farm with high levels of curtailment, let's see what's possible here? Or is it also, are there other features, like does it matter whether the grid is, more regulated or less regulated? Are there other variables that sort of come into the analysis in terms of how you go about choosing your sites?
Yeah, so there, I think you're kind of spot on there of some of the other ones. Obviously, the economics of the site, you play a huge role in it. And those economics generally are around, what is the curtailment? So you have what, in that, with that curtailment, it drives the overall energy price most of the time. There's also transmission capacity. So because you're doing the grid firming, you also need to make sure that that is available in the area that you're looking to site. And then the other first level pass that we take at any project is from a regulatory and a market standpoint. So having retail choice and basically being in the less regulated areas, energy markets in the US, it provide a huge benefit. Because if you look at, ERCOT has the most renewables of any energy market in the country, which, some people might be surprised to hear that it's Texas and not, what you'd think of maybe as like California or one of the more blue states. And that's really driven, prices down in ERCOT. There's also, ERCOT has the most deregulated market, which has driven prices down significantly. So I think the reason why you're seeing a lot of Bitcoin mining go to ERCOT is because from a regulatory market standpoint, it's very favorable for doing new business concepts quickly. And then it's also has the cheapest energy prices in the US. We are starting to look at other markets pretty actively that have retail choice where you aren't stuck with just have one provider or have other, market regulations that allow us to move quickly. Then there are some kind of, next level things of, what does the climate look like? Obviously, you have to cool these data centers. What is it like permitting and siting a project? For example, California actually, the wholesale energy prices are pretty low in California, but siting a project can be very difficult in California. So there are additional concerns that go into these, but the main one is what is the energy price, and then what does the regulatory market look like?
And when you get involved with a energy asset that might be not fully monetizing, how materially does that change their sort of core economics? Like, what's the influence there of wind or solar farm that works with you and eventually monetizes partially, at least through Bitcoin mining? Like, how much does that change sort of the core economics?
It can be very significant. So we actually presented a project yesterday that could effectively triple the revenue for the wind farm. This is one of the very bottom percentile performing projects in ERCOT. There are other projects where maybe they have negative pricing and curtailment somewhere around 10 to 15% of the time. And it sort of depends on how often that correlates with high wind speeds and thus high output as to how much energy you can then conserve and monetize. But it's very significant. Typically, in the range of 20 to 50% or more incremental revenue, meaning, additional revenue per year.
And do these contracts entail the renewable asset selling only to the Bitcoin miner, or is it a mixture? Do they also deliver energy to the grid for the duration of the contract?
Yeah, that's an important detail. So the Bitcoin miner is really there to capture energy when it's least valuable to the grid. So it's monetizing that otherwise negatively priced or curtailed energy. Depending on how you size the data center relative to the maximum output of the generation asset, you typically, when energy is its most valuable, the data center likely isn't running because prices on the grid are high, so it's naturally curtailing during those times. And then the generator is then supplying that energy on the grid for more, useful applications. So all the way down to the household level. There are also times sort of where prices are in the middle. And I think today that's where miners are still operating and consuming those sort of middle of the road prices while the generator is producing. But over time, obviously we see that decreasing.
This episode is brought to you by Compass Mining. Compass Mining is the world's first and largest online marketplace for Bitcoin mining hardware, hosting, and ASIC reselling. Bitcoin mining is only getting bigger, and so is Compass Mining. Compass is adding 280 megawatts worth of hosting capacity next year, with more to come. That's over 6 times Compass's current hosting capacity, meaning more people can mine Bitcoin. With Compass, anyone can mine Bitcoin. Start mining your own Bitcoin by visiting compassmining.io today. So during the grid scarcity events, like in a location like Texas and ERCOT, if you're exposed to the real-time price of electricity, you just are aware of your turn-off point in terms of profitability as a miner, right? But I guess there's also like formal programs that you would opt into in terms of demand response. Is that also a component of what you're working on here?
Yeah, so that's a great question. And the assets that we work with, self-curtailing is what we'll call it, where that's just yourself voluntarily turning off due to high prices. That's one way to operate a mine. When you're behind the meter, you can still participate in ERCOT. They call it a controllable load resource, but it's a demand response program. That's kind of an applicable term for any market. And you can participate in those programs as well. We do see, right, as more battery storage comes online, as more flexible load comes online, you're going to see the economics deteriorate or reduce for these ancillary markets that provide demand response. But it is definitely it can be a worthwhile component, and with volatility, you generally can drive more benefit from those. So it's something that's kind of a cherry on top for our projects, but definitely not part of the core offering. I mean, I think, they call them ancillary markets, and it's definitely for us, kind of an ancillary benefit that we can take advantage of, but it isn't necessary to make one of the projects make economic sense.
Yeah, it's kind of an interesting like push and pull. So on the one hand, the more renewable penetration on the grid, the more insurance products you want to buy as sort of a grid operator. In terms of insuring against the volatility or intermittency of that generation. But then at the same time, there's other sources of power system flexibility that you might obtain, like battery storage to the extent that becomes economical. And I guess, generally speaking, making other sources of flexibility on the load side. Yeah, so what's your guys' expectation there? Is that the flexibility would actually outpace the growth of the new renewables, which would be adding intermittency into the grid, like in Texas, for instance?
The way that I look at it is, if you look historically, right, the renewable generation has outpaced the flexibility on the demand side. And, really flexibility on the demand side is obviously, much more of a recent phenomenon compared to, generation. Generally, we just looked at, generation would follow load. And now we're seeing more and more load that's given, being able to be flexible, whether that's, adding a Nest thermostat to your house, or that's, the ability for these large loads like a Bitcoin mine to be able to turn on and off. So I think, right, you're going to continue to likely see, like we have in the past, generation outpace controllable loads. But, you're seeing things like Bitcoin mines that are coming in and taking advantage of that outpacement of renewable energies and take advantage of it. And I think you're going to see more assets like that. As you're kind of starting to see some projects of green hydrogen, which is really just kind of another storage form, take form. You could picture a future of, more flexible compute. Now, that there's, some of these hosting providers in the Bitcoin mining space are also looking at just kind of the general flexible compute marketplace, and they're seeing that kind of is going to have a lot of growth in the next few years. So I think it's a really exciting kind of opportunity to see more loads take advantage of the low energy that has been created with the significant increase in renewable generation. and intermittent renewable generation.
Yeah, that's one of the things I was going to ask you about actually, was other sources of flexible load. One of my mental models here is like Bitcoin mining being that sort of big initial pressure, which induced the creation of, an infrastructure which could consume this, excess energy on a location agnostic basis and, go right to the source. And then, maybe subsequently other sources of interruptible load could be employed aside from just Bitcoin. One that people are excited about is green hydrogen, of course, hydrogen electrolysis. What do you think, like, what's your view of sort of the plausibility of that, of sort of other subsequent high energy industries that can operate in similar, manners to like a Bitcoin data center? And then also just high performance compute, like, can that be flexibilized? What's your optimism around that?
Yeah, I want to sort of play on some of those concepts and introduce the concept of real-time pricing. So at least when Brock and I were initially studying power markets, real-time pricing was really the holy grail of energy market solutions. For a long time, the utility business model has been to provide a fixed price for energy, high reliability, fixed price, and really no demand response down to the commercial and residential level. With Bitcoin mining, they're plugging into markets in real time, and they're price responsive. And there are more and more utility programs and even just market reforms that are enabling more real-time pricing. So when you add that real-time pricing, it gives the incentive to any energy buyer to not be consuming power, at 5 p.m. on a hot summer day, if they don't need to be. So sort of minimizing their demands on the grid, so you don't have to build and overbuild generation and transmission capacity. And then with regard to other interruptible loads, I mean, with real-time pricing, let me add to real-time pricing too. I mean, like, 10 years ago, we didn't have the same level of power electronics, data processing, and other control systems in order to manage these types of loads. So like all of that has advanced in the last decade or two. The market reforms have advanced over that time. The amount of renewable generation has come on in that time. And now we just sort of have the perfect mix of everything that's needed to have a very flexible, resilient, responsive grid. So what those applications may end up being, that's to be determined. I mean, there's plenty of applications already happening, including Bitcoin mining. But from a feasibility perspective, it's all there.
Later on that, I mean, I think Andrew's point is great, right? Like, I don't want my grandma to be exposed to, completely, like time of use where you have prices spiking to $5,000. But that's where it's, as we become more sophisticated energy consumers and we have these automated processes to do that, we can see energy prices come down significantly by having these control solutions. So you'll definitely see them come in at first in larger loads, which is, like what you're saying with Bitcoin mining. And then over time, I think, right, you'll see it kind of come lower and lower, as we have automated systems that can help facilitate this for, less energy sophisticated customers. And then I think, right, like I'm super optimistic on use cases. Like I think people are incredibly creative. And as energy prices keep coming down, you're just going to see more and more use cases. And, you like whether that's, on I-10, you're sticking a bunch of, hydrogen electrolyzers to, support a trucking fleet, or, maybe you have, lights out factory that's just, 3D printing widgets, throwing them on a truck, and then those trucks are getting on I-10, right? Like, or it's, like a vertical farming and, shipping containers, right? Just, that I think there's tons of, and who knows which ones of these will take off and which ones of these, will have kind of like the same, ability to, site, pretty rurally. But I think we're going to see some pretty cool use cases in the coming years.
Yeah, it's interesting, because for the last year, the Texas, like the ERCOT model has been so unpopular, right? Since February 2021, I guess, with the, the broader political trends being to actually try and re-regulate the grid or regulate the grid and, eliminate the market-based dynamics which characterize the Texas grid. Yet from my seat, it looks like the market-based approach is just more efficient and allows loads to tune their consumption in a smarter way based on what the scarcity is of energy at that given point. I think one thing people don't understand is that in Texas, you don't have like regular old consumers that are exposed to the spot price of energy. So, regular folks are not paying $9,000 a megawatt hour during a scarcity event, right?
Some gritty customers were doing that in February of 2021. I was actually speaking with one of them who happens to be a Bitcoin Lightning developer, and she was telling me about her experience with gritty during that. But I think the price was sort of artificially held at $9,000 a megawatt hour for a longer period of time than it otherwise would have been, and the company had not modeled that into their forecast there.
Oh, so there were utilities that would act as a pass-through to give you access to like the sort of industrial rate at that time as a residential customer?
Yeah, these are retail electric providers in ERCOT. And so some of them were working down at the residential level and providing time of use pricing, effectively real-time pricing there. And it's great if you're monitoring prices and can curtail your loads, but if you're not paying attention, then it can definitely be a problem.
That's right. It's like basically an options writing, like a call option writing strategy. And the strike price was hit during the outage. Yeah. So what's your level of confidence that other, ISOs would ultimately follow the Texas model? I guess given like some of the difficulties we've seen in ERCOT. I mean, or is it is ERCOT a special case because there's no interconnections? And so that's sort of like the caveat that needs to be carved out there, which is maybe had there been interconnections, they would have just been able to import energy during the storm. And so maybe the model is not so broken after all.
Yeah, actually, for context here, there are about 10 to 15 states in the US that have this retail choice concept. Most of them are in the Northeast. And so in the Northeast, there's a lot higher population density, less land, less access to low cost renewable power. So from a Bitcoin mining perspective, it's a little trickier up there. But they do have the retail choice concept, and there are many customers, using that. There are also utilities across the US and across the world that have time of use pricing. So it might not be real time power, but they'll at least give you a discount if you aren't consuming as much power during peak hours. So utilities, retail providers, they're all very aware of this opportunity, and they're working towards solutions. But it's really a data problem at the end of the day, and a controls problem, and it takes time to implement that in such a complex system. But I think Bitcoin is a great incentive for that.
Yeah, and I think one language that everyone speaks is economic development, right? And as other states and are watching, right, all the economic development happening in rural Texas around mining, that's a huge incentive for them to figure it out. And we're seeing more and more utilities in various kind of more regulated markets in ERCOT coming to the table and actively working on how to make this happen and how to make it in a way to where it's it's a win-win-win, so that they're getting the economic development in their area, they're getting a good customer in their area, so it still needs to make sense for the miner, and then also if you look at the current energy customers in that, you also don't want to drive up their energy costs, so it's the model is definitely there, and we're working with these entities to implement it, and I think it's really exciting that at the end of the day it's economic development. Everyone's excited to see that.
And in terms of sort of the net effect on the grid, ultimately speaking, if you're, monetizing a renewable energy asset at a structurally higher rate than they would otherwise be able to sell, what the consequences of that is that there's just simply more abundant renewable energy available to end consumers when all is said and done. Is that right?
Yeah, it incentivizes investment in more renewable generation. This is one of the reasons we don't recommend sort of off-grid mining, period, but especially with renewables. If you're going to invest in a renewable energy asset, you want a long-term buyer for that power. And ideally you have some optionality. So when you have a grid connected solar farm or wind farm, you can have a relatively long-term buyer for that power, at least for the cheapest surplus power from a Bitcoin miner. And then you have the optionality of the power grid, that giant real-time battery that's, putting a value on any energy that's available.
So it's not just a meme that, Bitcoin mining incentivizes renewable generation. Like, you guys can attest to this on a first-hand basis.
Absolutely. I've run the numbers many times.
So in terms of like the future of Bitcoin mining, there's like a couple vertically integrated miners out there. Like, I think Greenidge is, and they have their behind the meter model. I believe Stronghold might be pursuing that as well. What do you make of the convergence between sort of the energy sector and Bitcoin mining? I see more energy firms getting into it directly or through partnerships. And like, what does the Bitcoin miner of 10 years from now look like? Is that or does that look like or the way Riot and Marathon look today, or is it more of like an Exxon and maybe like they just have their Bitcoin mining unit? What do you think the future of Bitcoin mining is? More vertically integrated, or is it more resemblant the way we have it today?
Yeah, I'll speak first to what Greenwich is doing. I mean, that's another great use case of sort of surplus energy. These natural gas peaker plants that would otherwise operate with a very low utilization rate are able to add some base load and then still provide power to the grid when it's available. It's a very similar concept to what we're doing. So wanted to call that out. And then in terms of where the market is going, it's been amazing to see in the last 3 years, how the conversation has shifted from energy companies saying basically thanks but no thanks, to then a couple of years ago saying like, okay, help us understand this customer segment. How do we sell energy to them? To the point today where they're saying, how do we own the Bitcoin miner? How do we capture a piece of that upside? And what does Bitcoin teach us about Bitcoin? So it's pretty amazing to see that. I mean, that was the goal of the company from day one, is to accelerate adoption of Bitcoin in the energy industry. Because Bitcoin mining is native to energy and capturing energy, I think we're really going to see the first large-scale applications of Bitcoin as a medium of exchange happen in the energy industry. So that's something that we're building to service the contracts that we're providing, which is to figure out, how can we reduce credit risk and settlement risk, and that sort of exposure using Bitcoin, whether it's through some of the transparency of the protocol or whether it's through the speed of settlement. The opportunities are endless, and I think energy companies are starting to understand this and asking the right questions.
And that's a huge, maybe issue in this market that is not, I don't think, super well understood or spoken about, is the fact that these energy companies are used to selling electrons, which is their commodity, to your Googles, your Amazons, your Coca-Colas, your large companies that have years of credit history, and whether you agree with the way credit is scored or whatever, I completely understand the kind of negatives there. However, that's the way the system currently works in terms of selling energy. So now you bring in a Bitcoin miner that doesn't necessarily have that track record. So they're not given the same credit treatment by these energy companies that these other large companies are. And what it's caused them to have to set aside a lot of what could be working capital and securities to service their credit. So that's a big part of what we do is help alleviate that credit requirement. So we do that, one, which is kind of understanding what is the credit exposure and having a real-time tracker. And then kind of where we're going with that is the settlement. So you take what is currently a 45-day settlement, and if you're looking at a 100 megawatt miner, your energy bill is a couple $1 million a month. So, over 45 days, that's about $3 million. That's potentially a liability for the utility. So by doing settlement, in ERCOT, the energy market settles every 15 minutes. So you could follow that with a Bitcoin settlement and really turn that liability into an asset for the energy company, and free up a lot of this, all of this money that's tied up in securities, and give more working capital to the miners.
So would you say that because renewables, like in particular intermittent renewables like wind and solar, like are so idiosyncratic in terms of like where locationally they make sense, and because they're temporal seasonality, both on an intraday and then, like annual basis. Because they have those unique qualities and Bitcoin like slots in very nicely, does the existence of Bitcoin fundamentally improve the outlook for renewables, or is it still too small a market as of today?
I think renewables were taking hold even without Bitcoin mining. I think it just accelerates that. Energy backed money, so money backed by surplus energy, absolutely is going to help that, right? It's taking all of that waste and conserving it by turning it into sound money. It's an amazing invention. I think to invent that and release it in 2008, you have to have some sense of where energy markets are going.
Really?
That's just my take on it. Yeah.
I always kind of figured that
accident.
I don't think if I were, reasoning about Bitcoin from the armchair on day one, I would never have expected that it would have this incredibly interesting interplay with excess, energy, in particular renewable. Last few questions here. So, despite the innovation in business models that we see from the likes of you guys, and there's quite a few interesting firms now active at this intersection, like there's still just a lot of Bitcoin mining with like conventional baseload. I'm not even sure that every large Bitcoin miner is even like, I see them bragging about their like high uptime, and I'm not sure that they'd even be enrolled in like demand response program to the extent it's available. We see Bitcoin miners using like, I won't name names, but some of like the dirtiest sources of energy in the US with just like conventional thermal generation. Do you expect that to persist? Do you think that your model will eventually dominate Bitcoin mining, and the sheer economic force of that will be compelling? Or is it a matter of some of the major names out there in Bitcoin mining we need to consciously push away from using like just like conventional thermal baseload sources?
My quick on that is because this is such a heavily regulated industry, you are going to have anomalies, here or there. So, I definitely would not say every project with a thermal, generation asset is going to not be profitable into the future, because just with the, different markets regulation, if you can, strike a good deal, the thermal asset's completely depreciated, there is definitely opportunities there. But I think, right, like Bitcoin mining right now is talking on adding gigawatts, which is, a massive amount of energy that we're going to see. So I do think that the lion's share of that, will be grid connected, will be focused on renewables, where you're going to have the basically the most sustainable cost advantage across the board. So I think that is where you will continue to see the lion's share of the growth. But not to say that you're not going to see kind of one-off projects here and there that make sense with traditional thermal.
Yeah, great points. It really depends on the interplay between the hash rate and the exchange rate. So I'm pretty confident that hash rate leads exchange rate. You have miners anticipating the next bull run and continuing to expand their capacity so that they can capture that opportunity. And the higher the hash rate goes relative to the exchange rate, the smaller the profit margin. Throw into that halvings and uncertainty about what transaction fees will do, or layer 2 solutions sort of minimizing the amount of transaction fees that ultimately end up sustaining the mining network. So that's going to push miners towards cheaper energy. And if you're locked into a fixed price, $40 per megawatt hour contract, if you were operating in S9 in 2019, your revenue per megawatt hour would have been less than $40 per megawatt hour. So you would have been in the red on that fixed price power contract. And that's going to continue to happen. And that's where what Brock said is very important. It's not just quote unquote sustainable energy, it's a sustainable cost advantage in that you're getting this very low cost, like zero cost marginally priced energy when it's abundant and available.
Yeah. So as miner margins contract, you're more price sensitive from an energy perspective, and so in theory you'd want to go for the cheapest source of energy, which are likely to be renewable in the future. Probably are today as well. One, I see ERCOT as like a template for what the rest of the U.S. grid might eventually look like in terms of like the size and sophistication of the ancillary market, the fact that it's deregulated on both the retail and utility side, and the scale of the renewable penetration. I know not everywhere in the U.S. has the same affinity for wind and solar, but it does seem like maybe a little bit of a vision of the future here in terms of the renewable penetration. Just one question from me, like when I look at the interconnection queue, it's like breathtaking in terms of the amount of solar and wind that's planned for ERCOT. I guess, is that all actually likely to be actually built, or is it more like only a fraction of that gets built? Because otherwise we're looking at like crazy numbers in terms of like, 3 years from now, like the amount of wind and solar that will be plugged in.
Yeah, so in any interconnection queue, you're always going to have some level of projects drop out for various reasons, whether it's the interconnection study, whether it's maybe a land deal didn't work out. It could be or the project maybe isn't getting financed for a completely separate reason. But I think what's interesting is that, you have that 100 gigawatt interconnection queue in ERCOT, where, something like 70-80% of that is solar, followed by wind, followed by batteries, followed by natural gas generation. And then you have, who knows how much, but, somewhere around 20 gigawatts of expected Bitcoin mining load to come into the ERCOT market. And that's going to incentivize more of that renewable generation to actually pass through the interconnection queue and get financed and get built and operate. So it's totally feasible that the ERCOT market doubles in size in the next 5 to 10 years.
And almost, and the bulk of that doubling could be from solar and wind, respectively.
Right.
It'll be reaching 50% plus in terms of renewable penetration.
Right. Yeah, I wouldn't say it would look radically different. I mean, they're already at somewhere around 25% of the energy is coming from wind, and then there's not a lot of solar yet, but that's scaling up pretty quickly. And that actually balances perfectly with wind, because you typically have a lot of wind energy at night and then solar power during the day. So if anything, it's balancing out the wind resource. And as we mentioned sort of earlier in the discussion, there, it's 2022. There are modern controls, modern data systems, modern technologies, demand response of all levels, and it can be done. It will be done. It's being done.
So this implies that the negative pricing frequency events are probably going to accelerate too, and it's the left tail of the distribution that maybe we have to be worried about as opposed to that right tail of power prices.
Not worried about. That's the opportunity for Bitcoin miners.
Right.
There's nothing to worry about there for a Bitcoin miner. That's a massive opportunity.
Yeah. Well, there's been a lot to chew on here today. Any last word or any message you'd like our listeners to take away from this?
Just want to say thank you for the time. It's great to get this message out. I think it's the Bitcoin community has not understood energy. Energy itself is a complex market. Bitcoin itself is a complex system. So to connect the two takes some learning. So we're just happy to share that and continue to educate the community. And we're always open for feedback and critiques and alternative viewpoints. So if anyone wants to reach out and give us their feedback, we're open for that.
And so I've spent a lot of time trying to learn about the energy markets precisely because of this interplay. I'm obviously still at the earliest stages there. What do you guys recommend in terms of like books or resources that you really liked and really helped you on your journey?
There's a really good market fundamentals book called Fundamentals of Power System Economics. I can share that resource with you. I think that just sort of covers the basic economic analysis of how power markets work. There's a couple of great graduate school programs that teach power markets. One at Duke University, one at Stanford University. I know Brock and I both did that.
Yeah, there's another, great kind of resource out there called the Clean Energy Leadership Institute. CELI is the acronym it goes by, but they'll do like 101 programs, with some frequency. So you could always check out their website and see when they're doing that. And then Obviously, like one of the big issues that we've spoken about in this is, building transmission lines. So Superpower is kind of an interesting book that talks about some of the difficulties and why just building more transmission lines isn't always the answer, a feasible answer. We're always happy to be a resource. I think, as Andrew said, if anyone wants to reach out to us, we're always happy to have the conversations and continue to educate.
Awesome. Well, I'll put those resources in the show notes, and I think I'll order those books myself. What's the best way to get in touch with you guys?
SatoshiEnergy.com. We have an email there. You can schedule a call if you're interested. Otherwise, LinkedIn, Twitter.
Yeah, then our emails are just our first name and at SatoshiEnergy.com. So Brock or Andrew, if you ever want to just send us an email, that also works.
Awesome. Well, thanks for the time, guys. This has been great.
Yeah, no, thank you so much. It was great.